Hello everyone. Welcome back to the QQQ vs QLD Challenge channel. It's the evening of March 10th, 2025. Let's dive deep into how QQQ and QLD have been performing recently and analyze the broader market trends influencing our long-term strategy. Since our last update, QQQ has taken a sharp downturn. Right now, the Nasdaq is officially in correction territory, having lost more than 10% from its recent high. More specifically, as of today, QQQ, which tracks the Nasdaq 100, has declined about 13% from its peak price of $540 on February 19, 2025. While this drop is significant, it is still well within the bounds of a correction. A bear market, defined as a decline of 20% or more from recent highs, is not yet in play, though it remains a possibility. The last bear market occurred in 2022, and although we are not at that level yet, we must consider all potential outcomes. In previous videos, we discussed the possibility of QQQ testing its 200-day simple moving average, SMA 200, represented by the green line on our charts. Historically, this level has acted as strong support during corrections. Over the past 2 years, since the Golden Cross of March 2023, there were two notable corrections where QQQ approached this line. The first was in October 2023, when QQQ nearly touched the SMA 200 and quickly rebounded. The second occurred in August 2024, when QQQ briefly touched the SMA 200 and rebounded once again. This time, however, QQQ has broken below the SMA 200, marking a significant development. At this stage, we need to consider what could happen next. Based on historical patterns, there are three possible scenarios. First, between 2010 and 2016, QQQ dipped below the SMA 200 green line briefly about once a year before recovering relatively quickly. These dips were short-lived and did not cause severe long-term damage. If history repeats itself, we may see QQQ rebound in the near future, possibly within weeks or months, without entering a bear market. The second scenario is more severe. During the COVID-19 market crash in March 2020, QQQ fell well below the SMA 200, experiencing a steep 31% decline from February to March. However, this drop was followed by a strong recovery, with QQQ climbing back above the SMA 200 just 1 month later, on April 7, 2020. What followed was a massive rally, with QQQ delivering strong bullish performance for the next 9 months. In this case, while the decline was sharp, the rebound was even stronger. The third scenario played out in 2022. That year, QQQ fell below the SMA 200 on January 21, 2022, and attempted to break back above it multiple times in early February, again in early March, and once more at the end of March, but failed each time. The death cross occurred in March 2022, and QQQ struggled for the next 12 months, only recovering when the Golden Cross finally appeared in March 2023. During that period, QQQ experienced a deep 33% drawdown, making it one of the worst declines in recent history. Among these three possible outcomes, I currently believe the first scenario is the most likely. Given the market's behavior, I expect QQQ to find support and recover within a few weeks or months without slipping into a full-blown bear market. However, it's important to stay cautious, as both the second and third scenarios remain possibilities. The key factor to watch is whether QQQ can reclaim the SMA 200 green line in the coming weeks. If it struggles to break above that level, it could be a warning sign that further downside is ahead. Let's take a look at some recent market news to get a broader perspective on what's happening. One article published today highlights a significant market sell-off, with the Nasdaq dropping over 4% and the S&P 500 losing more than 2%. Concerns about a potential U.S. recession have grown, particularly following comments from President Trump, who did not rule out the possibility of an economic downturn. This uncertainty has had a major impact on tech stocks, with Tesla plummeting over 13% and other major companies like Apple, Microsoft, and Amazon seeing declines of more than 3%. Meanwhile, Treasury yields have fallen, and the dollar index has hit its lowest level since November, signaling potential shifts in investor sentiment. Global markets are also under pressure, with Chinese stocks dropping due to weaker-than-expected inflation data and European markets showing mixed performance. Recession fears continue to be a hot topic. Commerce Secretary Howard Lutnick recently dismissed the idea of an imminent recession, but economists at major banks are growing more cautious. J.P. Morgan Chase raised its recession probability for 2025 to 40%, up from 30% earlier in the year. We see a material risk that the U.S. falls into recession this year due to extreme U.S. policies, J.P. Morgan analysts noted. Goldman Sachs also increased its 12-month recession probability to 20%, up from 15%, warning that this figure could rise further if current economic conditions persist. These forecasts highlight growing uncertainty, and if economic weakness continues, it could weigh on the stock market in the months ahead. Another article focuses on Nasdaq corrections and offers 3 key insights for investors. First, corrections do not always lead to larger crashes. Historically, markets tend to recover over time, and not every correction turns into a bear market. Second, times like these can present excellent buying opportunities. When the market pulls back, long-term investors who focus on strong fundamentals can accumulate shares at discounted prices. Third, success in investing often comes down to staying the course and thinking long-term. Those who stick to their strategies and continue investing through volatility tend to benefit the most when the market recovers. That said, experts emphasize the importance of maintaining a well-diversified portfolio to navigate uncertain conditions. As previously discussed, I anticipate continued market volatility throughout 2025. As of today, QQQ is trading at $472, significantly lower than last month's price of $522. Now, let's review our QQQ and QLD investments. We have invested a total of $3,600 in QQQ so far, with no gains or losses overall. Our average cost per share is approximately $473. On February 25th, I added 0.192 shares at $519. On March 6th, I purchased another 0.204 shares at $489. Similarly, we have invested $3,600 in QLD, but we are currently down about 5%, translating to a $200 loss. Our average cost per share is $96. On February 25th, right after purchasing QQQ, I bought 0.907 shares of QLD at $110. On March 6th, I added 1.026 shares at $97. Since May 2024, we have consistently committed to investing $100 or more into each ETF every month. This disciplined approach is one we plan to maintain for the next 30+ years. Our investment strategy remains rooted in a few key principles. First, we invest $100 into both QQQ and QLD every single month, regardless of market conditions. This ensures that we stay consistent and avoid emotional decision-making. Second, we use dollar-cost averaging, DCA, meaning we invest at regular intervals to smooth out market volatility and steadily build our portfolios over time. Third, we follow a strict buy-and-hold approach, meaning we do not sell shares even when the market is volatile. By staying invested, we focus on long-term compounding growth rather than short-term price fluctuations. Finally, we avoid margin trading, ensuring that all of our investments are made with our own money in a risk-managed and sustainable way. As we continue this challenge, discipline and patience will remain critical. The market is unpredictable in the short term, but by sticking to our plan and maintaining a long-term perspective, we are positioning ourselves for potential success in the years ahead. That's it for this month's update. If you enjoyed this video, please like, subscribe, and share your thoughts or questions in the comments. Remember, this channel is for entertainment purposes only. I'm not a financial advisor. Always align your investments with your personal goals and risk tolerance. Thank you for watching, and I'll see you next month. Happy investing!